everyone, welcome to Talking Money with Nozi, personal finance made simple. Today, I want to talk about investing in property, but not the kind of property investing that most people are used to, where you buy or build a flat or a house or houses and rent it out to tenants who then pay you rental income every month. Today, I'll be talking about an affordable and hands-off way to invest in property by investing in real estate investment trusts, also known as REITs, that are listed on the stock market. What is a real estate investment trust or a REIT? A REIT is a company that owns, manages, or finances income-producing properties. REITs own or provide finance for commercial properties like office parks, apartment buildings, warehouses, hospitals, shopping malls, shopping centers, student accommodation, factories, storage facilities, hotels, etc. REIT income can come from the properties themselves or from the debt on those properties. Here are some advantages of investing in REITs. REITs give investors like you and me access to property investments easily and cheaply. Unlike buying physical property, you don't need to have a 3-month bank statement, a good credit record, a deposit fee, lawyer fees, transfer fees, etc. To buy REITs, all you need is your smartphone, access to the internet, and a little bit of money. You can start investing in REITs with as little as 5 Rand or less. REITs give you access to commercial property. Most people like you and me cannot afford to buy office parks or hotels or shopping malls by ourselves. But REITs allow you to invest in these type of properties at low cost. With REITs, you get to own a piece of shopping malls, office parks, hotels, warehouses, storage facilities, etc. REITs offer automatic diversification because they manage and or own multiple properties. This means REIT income comes from different types of buildings in different locations. Some REITs even invest in properties in other countries. This is less risky compared to depending on a single building. For example, one residential property with one tenant on one street and in one country in one currency. REITs have a high payout ratio. By law, REITs are supposed to pay out at least 75% of their income to investors. But please note that all types of investments carry risks, including REITs. A lot of REITs, especially South African REITs, have suffered due to the effects of COVID-19, and some of them have reduced or cut dividend payments because some of their buildings like hotels or office parks, shopping malls, even residential apartments are not operating at full capacity. This highlights the importance of diversifying your investments across different sectors and across different countries. It is easy to buy and sell REITs. Buying and selling physical property can take a very long time. It can take weeks or months or even years if you are unlucky. But REITs are much more liquid investments. Liquid means easy to sell. You can buy and sell most REITs whenever you want with just a click of a button. REIT investors enjoy the benefits of having experienced property managers make money on their behalf, and you avoid the headaches of being a landlord. Somebody else handles the marketing, the rental collection. Somebody else handles the tenants and property maintenance. REIT investors just get rental income without lifting a finger. So how do you invest in REITs? There are 2 ways of investing in REITs that are on the stock market. One way is you can buy local or international individual REIT shares. Another way is you can buy groups of different REITs by investing in local or international property ETFs. If you still don't know what ETFs are, please watch the video that is appearing on your screen right now. I'm going to start by showing you individual REITs inside of the Easy Equities ZAR account. And then after that, I'm going to show you ETFs. So where it says select investment type, I leave it at equities. Then where it says category tags, that's where I'm going to scroll to the right until I get to the point that says Real Estate Investment Trust. So I click that, and what happens is whatever you see down here, those are REITs, the Real Estate Investment Trusts. Some of them may look familiar to you, some may not. Emira Property Fund is familiar to me. Growthpoint is familiar. Let's go to the next page. Redefine Properties is familiar to me. Storage is familiar. Vukile Property Fund. Let me click on Vukile Property Fund. To do research, you click on Yahoo Finance. Under where it says learn more about Vukile Property Fund, and Yahoo Finance opens. This is the chart that you see, the 1 day, 5 day, 1 month, 6 month, year to date, 1 year, 5 year, and max. This is the share price performance over these years. So I like to click on 5 year to see what the share price has been doing over the past 5 years, and you can see it has fallen from its previous highs. It's currently trading lower than it was 5 years ago. And what you also will see here is the dividend yield, which is 11.73%. Guys, be careful of chasing very high dividends. Sometimes companies have got high dividends if their share price has fallen. So you don't only look at the dividend yield, you have to check the financials of the company as well. Let's look at the chart to see how often they pay dividends. So you click on chart, and wherever you see the letter D, that means that's when a dividend was paid. Let me click on 5 years. In 2018, a dividend was paid in June as well as in December. In 2019, a dividend was paid in June as well as in December. So this REIT pays dividends twice a year, according to what we've seen so far. 2020, because of the pandemic, dividends were cut for many companies. So there was no dividend in June, but there was a dividend paid in October. And in 2021, there was a dividend in July as well as in December. Another thing that you want to look at is the profile. So you click on profile to see what this company is all about. So Vukile Property Fund, this is the head office. It's in Houghton Estate in Joburg. Sector is real estate, industry is REIT. Here you can see who are the CEOs and managing directors. The description says Vukile Property Fund is a property company which has listed on the JSE Limited on 24 June 2004 and on the Namibian Stock Exchange on 11 July 2007. Vukile's market cap was approximately 11 billion at 31 March 2015, and its property portfolio was valued at 13.3 billion at year end. Then another thing you'd want to check, obviously, is the financials. You never invest in a company before checking its financial health. So you check the income statement, which is the first one which opens. You look at total revenue. Has it been growing over the years? Look at gross profit. Has it been increasing over the years? So starting from 2018, just look at the numbers going across. See if the numbers have been increasing. Also, another thing that you want to look at is earnings per share or basic EPS. EPS stands for earnings per share. You should look at that, and it should be increasing over the years as well. And then another thing you want to look at is the balance sheet. The balance sheet shows total assets, total liabilities, and total equity. So your assets should be increasing over the years. Your liabilities should be ideally decreasing, and your total equity should be increasing over the years. So you look at total equity starting from 2018 right up to 2021. See if that has been improving or going down. Let's go back and look at another REIT. Let's look at Growthpoint Properties, and then you click on Yahoo Finance to do your research. Again, just like what we did for Vukile Property Fund. This is what opens. You'll see that the dividend yield is 8.14%. And then this is the graph showing the share price performance: 1 day, 5 day, 1 month, 6 month, 1 year, 5 year, and max. So if I click on 5 year, again, it's in the red. So in the past 5 years, the share price has actually gone down. Then again, you go to the chart to have a look at how often they pay dividends. So I'm going to select 2 year, or let me just leave it at 5 year to see how often they pay dividends. So in 2018, there was a dividend paid in March, another dividend paid in September. Then in 2019, a dividend was paid in April. Then another dividend in October. 2020, a dividend was paid in April and another dividend in December. So you can see that this REIT pays dividends twice a year. Then the next thing you want to look at is the profile. And you can see Growthpoint Properties head office is in Sandton. These are the CEOs and financial directors and so forth. And this is the description. Growthpoint is the largest South African primary JSE listed REIT with a quality portfolio of 440 directly owned properties in South Africa, valued at 73 billion rand, including 4 hospitals and 1 medical chambers, valued at 2.6 billion rand, owned by Growthpoint Healthcare Property Holdings Limited, GHPH. Growthpoint has a 61.8% shareholding in GHPH. They also have a 62.2% interest in the ASX listed Growthpoint Properties Australia. So ASX stands for Australian Stock Exchange, which owns 58 properties in Australia valued at 51 billion rand. And they also have a 52.1% interest in the LSE listed Capital and Regional PLC. LSE stands for London Stock Exchange, which owns 7 properties in the United Kingdom valued at 14.8 billion rand. Again, you want to look at the financials. You never buy a share without going into financials. So you look at the income statement, check the revenue, check the profits, check the earnings per share. Over the years, has it been increasing? You also look at the balance sheet. In the balance sheet, you're looking at total assets and you're also looking at total equity. Those must be growing over the years. And then you also look at the cash flow. The cash flow, what I mostly look at is the free cash flow. I want to see free cash flow increasing over the years. The easy equity is USD. It does have REITs, it's just that the category tag is not there. I don't know why, maybe that's a glitch with the easy equity system, but I definitely know that they do have REITs. There's one REIT which I know by heart that I'm going to just show you. It's called Realty Income. Okay, there we go. To learn more about it, you click on Yahoo Finance and the dividend yield is 4.27%. Let's look at the chart for 5 years. It's been doing good. Let's look at the maximum. It's been doing very well. Let's have a look at the chart to see dividends. And what I know is that Realty Income pays dividends every month. Let me just click on 1 year because otherwise it's a lot. So you can see it's starting in 2021. There's dividends in every month. So there's January, there's February, March, April, May, June, July, August, September, October. Basically, Realty Income pays dividends every single month. So that's why people like this REIT. Then you go to profile so that you can see what Realty Income is all about. Okay, so there's the headquarters. It's in San Diego, United States. And the description, Realty Income, the monthly dividend company, right, is an S&P 500 company dedicated to providing stockholders with dependable monthly income. The company is structured as a REIT and its monthly dividends are supported by the cash flow from over 6,500 real estate properties owned under long-term lease agreements with our commercial clients. To date, the company has declared 608 consecutive common stock monthly dividends throughout its 52-year operating history and increased the dividend 109 times since Realty Income's public listing in 1994 on the New York Stock Exchange. And then of course you want to dive into the financials as I've shown you for the 2 other REITs. Let's go to the Easy Equities AUD, click on Equities, let's scroll to the right, and here are the Real Estate Investment Trusts. So these are the Real Estate Investment Trusts in the AUD account. Page 2. Okay, so these are all the real estate investment trusts. Now let's move on to ETFs. I'm done with showing you individual REITs. So with ETFs, I love using this website called etfsa.co.za. And with ETFs, I look at the index tract as well as the name. So the index tract gives me a clue of what that ETF is about. So for example, our first ETF that we'll look at is this one, the One Invest Global REIT, and it tracks this index called FTSE EPRA/NA REIT Global REIT Index. The TER is 0.34%, and the TER stands for Total Expense Ratio. This is the management fee that is charged on all ETFs. It's an annual management fee. The lower the TER, the better. So if you are choosing ETFs, make sure you choose ETFs with a low TER. Let's view the fact sheet to see what this ETF is all about. So we click on view. The risk rating is aggressive, and the minimum suggested investment period. It's saying if you're going to invest in this ETF, make sure you invest for 5 years and above. I want to see the performance, percentage returns. Over 1 year, it returned 18.96%. Over 2 years, 1.30%. Over 3 years, 7.90%. And since it was launched in 2018, 15.08% in return. And this ETF is a basket of REITs, and the REITs come from different countries. The top country that is represented in this ETF is the United States at 68%. Then there's Japan, United Kingdom, Australia, Canada, Singapore, France, South Africa. We are represented in this REIT, Hong Kong, Belgium, and other countries. These are the top holdings in this ETF. Prologis REIT Inc., Equinix REIT, Public Storage, Simon Property Group, Digital Realty Trust, Welltower, Avalon Bay Communities, Equity Residential REIT, Alexandria Real Estate Equities, Realty Income. We've already seen Realty Income, right? If you're interested in knowing what all those REITs are all about, you can knock yourself out, copy, come and paste in Yahoo Finance, and do the same thing that I did for the other REITs that I showed you already. Then we want to look at the profile. So where it says profile, we click on view. I want to see the dividend distributions. Okay, so this is the dividend history for this REIT ETF. Just by looking, I can see that they pay dividends 4 times a year: January 2019, April 2019, July 2019, and October 2019. Again, January 2020, April 2020, July 2020, October 2020. And the next ETF is this one, the One Invest SA Property ETF. It's a domestic ETF, meaning it's a local ETF. The TER is 0.29%, and you view the fact sheet over here. So this fund was launched in February 2013. It's also aggressive. Minimum investment period is 5 years. And here are the top holdings: Growthpoint Properties, Nappy Rock Castle, Redefined Properties, Resilient REIT, Fortress REIT, Equities Property Fund, Vugile Property Fund, High Prop Investments, Mass Real Estate, Serious Real Estate. And I want to look at the returns. So over the past 3 years, actually the returns were negative 7.19%. Over the past 5 years, negative 6.04%. Over the past 7 years, negative 0.59%. And since launch, it has returned 1.57%. Guys, local REITs have been hit really badly. So just be aware of this before you go and dive in and buy REITs. Let's have a look at the distributions. How often do they distribute dividends? So you go to profile, click on view. So it seems like they distribute 4 times a year. In 2019, January, April, July, October. In 2020, January, April, July, October. So they distribute 4 times a year. And you can see how much they pay in dividends as well. Lastly, guys, there are so many of these property ETFs. I'm just showing you how to do your research. And basically, what you look at when you're choosing your ETFs, you go for the lower TER. So for example, this Cautious Global Property has got a TER of 0.52, which is higher than what we've seen so far with the One Invest Global REIT, which has a TER of 0.34%. But then you also want to go in and read the fact sheet, what that ETF is all about, what companies it has, or countries by representation, and then you also see how often they distribute dividends. So this one distributes dividends twice a year. Now let's talk about REITs and taxes. Please note that the income that you receive from REITs is taxed differently from normal dividends. Normal dividends are taxed at a maximum of 20%, and this dividend tax is taken before you even receive your dividends, right? The tax is taken by the company and what you get is already taxed. But income from REITs is not taxed at 20%. It is taxed in your hands according to where you fall on the SARS income tax tables. I want to show you the difference between normal dividends as well as distributions from REITs. So this is my transaction history. To check your transaction history on the web, you click on menu, scroll right to the bottom and select transaction history. Okay. So then I selected the dates, when it should start, when it should end, and this is what it shows me. So on the 6th of December, I received dividends from Vodacom. So the dividend was 24 Rand and 14 cents. Okay. But then look at this, the dividend withholding tax was 20% and it was taken off. So my account was credited with 24 Rand 14 minus 4 Rand 83 cents. So I didn't have to pay dividend tax. It was deducted on my behalf. But look at storage. Storage Property REIT Limited. They gave me a dividend of 13 Rand and 12 cents. There was no tax deducted. So what this means is that when I'm doing my filing with SARS next year, when I'm doing my tax returns, I need to declare this as income that I received. Then SARS will then see whether or not I owe them tax or not. Let's have a look at the South African Revenue Service. Let's look at their rates of tax for individuals. So this is the 2022 tax year, which is where we are currently at right now. So if you're earning from 1 to 216,200 Rand, your tax rate is 18%. So if you get income from REITs and you fall in this tax bracket, it means your REITs are going to be taxed at 18%. If you're earning between 216,201 Rand and 337,800 Rand, it means that your tax bracket is 26%. So it means that your REIT income is going to be taxed at 26%. So the next level is 31%, the next is 36%, the next is 39%, the next is 41%, and the last top tier is 45%. So the income from REIT distributions can become taxed at a very high tax rate if you are a high income earner. So as an investor, you should know where you fall on these tax tables so that you know whether it makes sense to pay income tax on REIT income or not. What if you want to invest in REITs but you want to avoid high income taxes? Well, the cheapest and most tax efficient way to buy South African or international REITs is by buying local or international property ETFs inside your tax-free savings account, your TFSA. If you have any questions or comments about REITs, please write them in the comment section below and I'll get back to you. Also, if you want to start investing in the stock market but you need guidance, you can buy a copy of my ebook for beginner investors. Please see my contact details in the description below. Okay guys, that's it for today. If you enjoyed this, please hit the like and the subscribe button and I will see you in the next video. Bye.